Hello everybody, and welcome back to my channel. This is episode 18 of my investing journey, where I share my weekly portfolio updates, ETF buys, sells, income progress, and how I'm building an income-focused portfolio over time. As always, this is not financial advice. I'm just sharing my real portfolio with all of you and documenting this amazing journey. Okay? As always, the first thing that I always share with you guys is how my portfolio is doing. This is my Wealth Simply platform, so what you see here is what it actually really is. As you can see, we're a little bit down over last week, but we'll go into that as we go through the presentation. But so far, we're still in the green, which is good, so no complaints there. In terms of my weekly contribution, well, yeah, my $75, as long as I can, this is what it's going to be. I'm being consistent today so I can have some wealth tomorrow, right? So I added my $75. In terms of trading, I kept things simple. I didn't sell anything. We did, if you remember from last week, we consolidated some positions. This week, all I did was buy some shares. I got 2 shares of PayG, 1 share of HPYE, and 1 share of HPYB. Okay. This week was more about steady accumulation than about repositioning, because that's what we did last week. In terms of the in distributions, well, there's no distributions this week. The next round of distribution, it's scheduled to be next week, around May 6th to the 8th. I believe I'm getting distributions the 6th, the 7th, and the 8th. So that will be the normal monthly ones plus the first round of the bi-weekly ones. In terms of performance, well, portfolio did pull back a little bit this week, right? And now, as you saw from the very beginning, sits at 4.37 year to date, and that is compared to 5.46 year to date last week. It's still positive overall, but it was definitely a softer week, right? Nothing to be concerned about it because we're here for the long term. But yeah, no, it's still good. I'm still happy with the way things are going. Now let's talk about the top performer this week. The top performer this week actually was HYLD. Okay, HYLD was up this week 1.73%, which is very good. It's not a flashy monster move like we had the previous week with AMD, but it's a very solid example of why I hold this kind of ETFs in the first place, right? HYLD is a US large cap covered call structure, which very quietly did its job, right? In a week where the markets were choppy, at the very beginning of the week, things were looking very grim, and then they actually managed to recover a little bit later. This more defensive income-generating approach held up actually pretty good, and something way better than some of the more aggressive names that I held in my portfolio. So while it wasn't the biggest gain I've ever had from a holding, this is exactly the kind of steady performance that I want from as part of this portfolio that I'm building. If we take a look at the week-to-date rankings, as we do every week, well, this was definitely a much more mixed week. We went from 2 weeks ago when everything was green to last week where I think one of them was red to this week where we had 9 holdings in the green and 11 in the red, right? Top performance, obviously HYLD, as we mentioned before. We have 6E, we have AMD, which remains up there. QDay, USCL, HHIC, SDay, HPYB, and HHIS. And in terms of the ones that didn't really do that well, HDIF, CDay, and obviously the biggest drag, the metals, right? The metals were the biggest drag in the portfolio. GLCL falling 8.6%, CPCC falling 5.6%, and then CCHI falling 3.72%. This is, I believe, the second consecutive week for metals. A very rough week, but it is what it is, right? After a very strong early run in the year, these holdings have now given back a meaningful chunk of the gains, but it is what it is, right? This is an area that I'm watching closely, but I'm not going to modify my position regardless. Yeah, as we spoke, this is what I was just telling you all about the metals, right? The main takeaway for me, well, this was a quiet week, a more defensive week for the portfolio after several much bigger swings in early weeks. My cover call core did exactly what it's built to do. It holds steady in the choppy market, and that part of the portfolio gave me some stability with some of the more cyclical and commodity-linked names that kept pulling back, right? Heading into next week, well, I think there are two big things to watch. First, obviously, is the next round of distributions that is coming up, which is always important for the income side of this strategy. And second is the broader market story. It still matters, right? It still matters for a lot for this portfolio. Big tech earnings remain important, and macro headlines continue to have a big impact on commodities and metal-related positions. If there is a peace plan, well, then that means people are not going to put their money in gold. If there's no peace plan, then that means people will put their money on gold, meaning that gold, silver, and all other metals will go up, right? But yeah, that's really it. So this is it for episode 18. Hopefully you like what you see. Please give us a like and then, a subscription if you find it in you. We're trying to reach 100 subscribers before the end of the year. And thanks for following along. And I will see you all next week for episode 19. Thank you so much. Take care. Bye-bye now.